Hey guys, welcome back to another session of this time is a XC webinar focusing on advanced trading strategy, particularly focusing around RSI and stochastic. All right, I see a couple of familiar faces. We got Larry, we got Imad, we got Santo. Nice to see you guys back, and I'm ready to take you guys on another journey of of crazy kind of analysis, trading strategies, and it's going to be fun. All right, so today our topic focuses more on trading strategies, right? So one common trading strategy that a lot of people use, but personally I feel that it might be a little bit misused, is the RSI and stochastic strategy. Right. Traditionally, a lot of people use RSI 70-30, stochastic 80-20 to determine their overbought and oversold levels. And today, I'll be showing you what we deem from an institutional point of view as the true RSI, and different ways to interpret it beyond just divergence levels. Right. Anyway. Now let us begin. All right. Once again, I want to urge you guys. You guys have been fantastic audiences, and anytime you have a question, I literally have another screen open over here just to monitor the questions that are coming through. So don't hesitate to really send them through, and I'll do my best to answer them along the way. And if you've been to any of our previous webinars, you know that at the end we rarely have time for questions. So don't wait until the end. Right, if you have a chance, just go in and post it. All right. Now, the agenda for today. RSI is stochastic, right? 80-20, 70-30. Who uses it, right? Second thing I want to focus on are true RSI and true stochastic levels. These are what I call hidden levels on stochastic and RSI. I'll be showing today. We'll be focusing more on examples because we have had requests to show more examples, maybe less drawings on the charts, and more examples. So that is what I'm focusing on today. Diagonal levels, I'll definitely be showing you different ways. Diagonal breakouts on how you can trade RSI and stochastic. Then we look at true RSI and true stochastic indicator, which will be our giveaway for today, right? So stay until the end. We have a special session where it has never been released before. The true RSI is something we built. We have spent the past about 6 months building, right? But now it's finally built. It's a cool new tool that helps you kind of scan for hidden levels of RSI and stochastic. Really exciting, right? So we'll be giving that away at the end of the session. Right. Okay. Before I begin, a little bit about myself and the team we run. Right. I'm Desmond Leong. Right. I run Everest Fortune Group. We are award-winning research team. Right. Recently, for 2019 and 2020, we were the best FX and best equity research and a certified Singapore fintech company. You find us on radio. You find us on TV. And we advise a lot of the major financial institutions out there. Our background is really on institutional grade research, and today we'll be sharing with you a little some of the tips and tricks that we use to advise some of the biggest banks in the past. Right. So before we begin, as always, a little bit of a disclaimer for you guys to go through. Right, trading CFDs is dangerous. Right. You should always do your own research. Right. Do your own independent research, and anything that is shared in this webinar should not be construed as investment advice. All right, so guys, basically the drill. Be safe, trade safe, and yeah, if you have questions, feel free to shoot them across. Now, 80-20, 70-30. Who can guess which one belongs to stochastic and which one belongs to RSI? Right. Who can guess which one, 80-20, does it belong to stochastic or RSI? And what about 70-30? Now's a good chance for you guys to practice practice using the chat panel, right? So that you kind of get familiarized with it, so that as the webinar progresses, you can just shoot questions across straight away, right? Okay, I see most of you guys saying 70-30 is RSI. We have Dominica, who has said 80-20 is RSI, right? On the contrary, that is not wrong either, right? Because 80-20 could be RSI, 80-20 could be stochastic. And the funny thing is, if I look at many of the responses that are coming through, everyone has an answer, right? Everyone, almost everyone has an answer. And the funny thing is, no one has ever said stochastic has to be 80-20 and RSI has to be 70-30. If you think about it, right, the creator of the formula never strictly said that, okay, 80-20 is definitely the level for you to look at and 70-30 is definitely the level for you to look at. If you think about it, right, we read about it on Investopedia, we read about it on the forums, but do you think the markets, right, do you think the markets will look at stochastic at 80-20 and be like, okay, whoa, we are reaching the 80-20 level, better prepare for a bounce, right? That the market doesn't do that. The market doesn't read baby pips. The market doesn't read Investopedia, right? The market does whatever it wants to do, right? The market does whatever it wants to do. So we should always take these levels, 80-20, 70-30, with a pinch of salt, right? No, it is good guidelines to work with, but no one has ever said that stochastic and RSI need to really obey these levels. Okay, now I'd like to share with you back when we were advising the institutions, right? One thing we love to look out for is what we call true RSI and true stochastic levels. Now, these levels are based on what the market gives you, right? It's not so much on what you read on Investopedia. Rather, it's based on what the market gives you, right? In the XC webinar series, we will cover many different kind of trading strategies, right? From Fibonacci confluence, support resistance, harmonics, maybe a little bit on Elliott wave. We'll be covering quite a number of topics, and one of the best complements, right? One of the best complements to these trading strategies is the RSI and stochastics. Okay. Now, so what I'm trying to say is that from my personal point of view, this RSI and stochastic is pretty strong, but it is not strong enough for you to trade on it purely alone. You should back it up with other analysis, right? Other trading strategies to really improve your odds on winning. So if you were with me on my lesson on risk management, you know what I mean, that the more levels that line up, the more boxes you check off, the better your trading opportunity. All right. And yeah, good afternoon, Archie. Welcome to the webinar. Now, let's go to RSI hidden resistance. Okay, I'm just going to show you a chart over here, a before and after chart. Okay, let me explain how it works out. I know it might look a little bit overwhelming, but that is what I am here for. Okay, now let me pick my favorite color, which is supposed to be green, but in this case is red. Okay, so what we notice, right, on the chart, right, there is price reacted off here, and you can see price reacting off this level. There was a drop from here, same thing on price. You can see RSI dropping and price dropping, right? So what we're noticing, right, is that there is this level, and it is the 65 level. Can you see that? Right, it's the 65 level on the RSI that seems to be working well for price. We, of course, back this up with our own analysis. We are doing a channel strategy, right? We're playing a channel resistance. Personally, for me, the channel resistance that we see over here, this is all secondary, okay? Because the RSI and stochastic, think of it as good add-ons. It's good add-ons to your current strategy to improve the odds of it being profitable. And it is a really good way to kind of, what's the word for it? It's a really good way to tell if the market is trying to fake you out, right? To bluff you or to trick you, right? One of the best ways is really the RSI and stochastic, right? So you can see here, let's just test and see if anyone remembers this. This sell entry, is it, what kind of resistance is this, right? Is it a pullback resistance? Is it an overlap resistance? Is it a swing low resistance, right? Come on, guys, don't disappoint me. I see Imad has got it correct, right? Does anyone know what kind of resistance is this? Pullback, overlap, or swing low or swing high resistance? Anyone want to take a guess? Okay, we got people saying range resistance, swing, aging high, swing high resistance. Well, okay, guys, you need to attend my support and resistance lesson again. That was last week. Swing high is correct if you only consider this level over here. But because there was this level, right, that reacted off it previously, so there's something that, price obeyed it from the top, price obeyed it from the bottom, it becomes an overlap resistance, right? So our sell entry was really at the overlap resistance, right? Most people will be thinking that, okay, there's a channel. It looks like price has broken out the channel. We're expecting it to go up, right? But what we realize is that even though price broke out from this channel, right, it is at overlap resistance, right? And remember, I always mention horizontal resistance and support is much better than diagonal, because diagonal, a little bit change in price here and there is gonna cause you to it's gonna throw you off guard, right? One pip up or one pip down can cause your trend line to be very, very different, right? So in this case, what the market is doing really is that it is tricking everyone to think that there's gonna be a nice little breakout over here. Everyone who is playing the channel thinks that is going to go up over here, right? Think that price is going to go up. But we know that it is safer to use horizontal levels, right? Horizontal levels, right? So we have identified this sell entry, and at the same time, right, we also realize that RSI is at 65. It is, it is holding below this hidden level of 65, right? So don't just take don't just take 70, 30, 80, 20, right? See what the market is giving you. And in this case, the market is telling you that 65% is the hidden level of resistance, right? So what we did from here, of course, is that we decided to sell. You notice these charts are very old because they're pulled they're pulled out from they're pulled out from way a long time ago when we were still doing charting and trading view wasn't around yet, right? And what happened is that price reversed perfectly. As you can see over here, price reversed perfectly, RSI reversed perfectly. Everyone who thought that this was a breakout and price is going to shoot all the way up, right? They were taken out. They were taken out, and price shot down. It continued all the way down, and we managed to avoid the trap. So this is one very good thing about the RSI hidden levels, right? It actually allows you. It allows you to look at the market and say, hey, is something a little bit fishy over here, right? Something a little bit fishy. Is there a trap, right? And personally for me, remember, I always mention this, and that is for diagonal levels. Yes, you said it right, Imad, right? For diagonal levels, right, you use it for momentum, for direction, right? So you can see the price is making a lower high, a lower high, a lower high, a lower high, lower highs here. So we can see that the momentum generally is down, right? This is bearish momentum. We cannot pinpoint the entry. Everyone who tried to pinpoint the entry basically got in here, right? They think it's a channel breakout and they got smashed, right? Instead, what a descending, a diagonal level is good for us to tell you the momentum. For entry, you should always look at the horizontal lines, which is what we did. right? So anyway, without digressing too much, what I showed you is that there's a very nice little reversal on RSI, and correspondingly, more importantly, there's a very nice reversal on stochastic, no, on price, So please take note of that, right? Try to look out for the hidden levels. Personally, for me, I look for at least 4 out of 5 times. Out of the past 5 big big drops, right? There needs to be RSI needs to have reacted off it at least 4 times. So 4 out of the past 5 times, RSI needs to have reacted off the levels, right? You can see that this one is a little bit higher over here. It's fine, right? But at least 4 out of 5 times. So that gives us an 80% chance, or roughly an 80% chance, that the next time RSI reaches there, it will reverse. Okay, now we have a question from Tafatswa asking, what's the correct period or duration for RSI? Personally, for me, I toggle the same way that people tell you 70-30 is the correct level. It's the same thing I can tell you about RSI periods, there not being a correct period for RSI, right? Some people say, is the correct period 14? Is the correct period 8? Is the correct period 100? Right? There is no correct answer to that. However, what I would do is I would toggle between 21, I would toggle between 34, I would toggle between 55. These are Fibonacci numbers, right? And the last one I will toggle is 89. The lowest I will go is 14, yes. So I'll toggle between these 5. And I will see if the market is telling me, I would basically see if the market is telling me if there's any hidden levels across these 5 different periods. Now, who knows what is how to do a higher time frame to lower, or rather, who knows what is a multi-time frame analysis? Can anyone share with me what they think a multi-time frame analysis is? Right? Yes. Can anyone share with me? Okay, Costel, you're very honest. Okay, we got Larry saying that it uses different time frame to look at the bigger picture and the trend. Archie says it's a top-down analysis. Imad says, yeah, you're marking up the higher time frames to a lower time frames to understand the general direction of the market, right? Most of you guys answered it correctly. Basically, you factor in multiple time frames, right? Yeah, it does help you see the bigger picture and the smaller picture, which is very important. More importantly, it addresses this point that when you look at RSI, don't just think that there is one correct RSI level, right? The same way you will look at multi-time frame across the charts, right? Don't just look at H1, and maybe you look at H4, maybe you look at M15, right? The same way you do a top-down kind of approach, you should also factor in multiple RSI levels, right? Multiple different RSI levels, multiple different stochastic levels when you're doing your analysis. Okay, and it's you don't expect every single level to line up, but it always is good to understand the bigger picture, right? If out of these 5, I noticed that 1, 2, 3 are all on a hidden level of resistance, but 4 and 5 is not, right? That tells me a lot more than when only one is correct and every single thing else is not agreeing with it, right? So always factor that in, that just like how you would use multi-time frame for price action, no, for prices, right? You can use multi-time frame for RSI too. Okay, now I'm going to erase my drawings. And so just like RSI, our good friend Stochastic, right, has hidden levels of resistance too. Now, you will always notice that when what I'm showing you here it always comes with a strategy, right? So, guys, look at this. Who can tell me what kind of resistance is this? Right? Can anyone tell me what kind of resistance is this? Where is my sell entry place? Okay, we got guys saying it's range, we got guys saying it's a swing high resistance. But the truth is what I mentioned just now, previously. It's an overlap resistance. That's right, Tapatswa. There's an overlap resistance. Overlap resistance combined with a 100% Fibonacci extension. Okay, so the distance from here to here is the same as the distance from here to here. Okay, 100% Fibonacci extension, overlap resistance, and if you do a Fibonacci retracement from the top all the way down to here, right, that would probably be about a 61.8 Fibonacci retracement. So all of that combined, right, and what we notice is that there is, right, you can see that price has reacted once off this level very nicely, right? I mean, stochastic reversed very nicely here again, right? So third time when price is reaching this 97%, right, and it's in line with our sell entry. What I do is I take a trade and I play it all the way down to the next big support down here. Okay, so you can see how price really okay, so TradingView doesn't print, didn't allow me to kind of print the how stochastic turned out, but what happened is that there's a very big reversal in price, and stochastic also had a very big reversal, right? So think about it that yes, that the funny thing about this case is that stochastic is at 97%, right? It's not at 80%, it's not at 70%, it's at 97%. So try to look at what the market is telling you and find the levels from there, right? This can get a lot more advanced, right? What do I mean by a lot more advanced is in this case, right? We look at this trading strategy, right? Look at this trading strategy, is one of the best trades I've ever placed, right? Same thing here. Let me see if I can take out my little trusty pen, right? You can see that this is stochastic, right? It traditionally seems to reverse off the 97%, right? Traditionally, it seems to reverse off 97%, right? It has a very nice descending resistance. It looks like it is breaking out of descending resistance, right? But if you combine the hidden level of resistance, and you notice that after this big reaction off here, there is a very nice, divergence. What is divergence? Divergence is that you see there's a high, there's a lower high, and there's a lower high, right? So price is RSI, I mean stochastic, is generally going downwards, right? But on price, it is going higher, and is going higher, right? So price is going higher, stochastic is going lower. There's this thing called a bearish divergence. Okay, so when there's a bearish divergence, it occurs around an overlap resistance, right? There is descending resistance to tell us of the momentum of the trade, right? All of that lines up very nicely to tell me that this could be a very nice, this is not a breakout that you're looking at. Instead, it could be a very, very nice reversal that you're looking at, right? And what has happened since then is that price really just reversed completely. If we held on to the trade longer, we have reversed all the way, right? But this is one of the great things about looking for the hidden levels of support and hidden levels of resistance for stochastic, right? The last thing I'm going to show you is how a hidden level of stochastic, right, can help you avoid a fake out, right? Being tricked by the market, right? And that is over here, right? I know you can't really see it, but there was a very nice bounce on price along with stochastic at this level, right? And what we are seeing over here is that it's not too good an example. I don't really like it, but there's a very nice 100% extension. The distance from here to here is the same as the distance from here to here. Okay, right? And it looks like price is going to break out over here, right? You can see that price has actually came to this level. Looks like it's breaking out, but what we did notice is that price was at 7%. This was our hidden level of support, right? And that, with a nice little 100% extension, tells me that there is a possibility that price would shoot up to here. Okay, now these trading strategies, how to do Fibonacci extensions, retracements, drawing trend lines, we will cover them in other topics in the next few weeks on this XC education series, right? But I do want to show you how, when you notice that price is already bouncing off a key hidden level on stochastic, that is a big sign for you that this bounce, this is not going to go down. This is not a breakout, right? In fact, it has a potential to bounce from here. Okay, so what really happened, right? Just got to erase this. What happened from there was really nice bounce all the way. A lot of people thought it was going to drop all the way, but instead it bounced up. Okay, now I've covered enough about the hidden levels of support and resistance. We will hopefully have some time to cover them in detail later, right? Again, I'm being very wary of time because when would you use RSI? So we got a question from Larry, right? When would you use RSI and when would you use stochastic? In fact, I would use both, right? What one tells you, the other might not tell you, right? If both of them agree, both of them happen to be on a hidden level of support and resistance at the same time, that is fantastic, right? That is fantastic. It's like, you know, more boxes are checked, we are more confident. But when I'm going to use it also depends on the trading strategy I'm playing, right? So what you have been looking at so far is what we call contrarian strategies. Contrarian strategies are what we call, you know, we find a level, and how we look to play is we look to play the bounce or we look to play the reversal. These are contrarian strategies. Okay, contrarian strategies work very well with hidden levels of support and hidden levels of resistance. What they don't work well with is breakout, right? So there are the people who look for the bounce, and there are the people who wait for the level to be broken, and then they play the drop or they play the rise, right? So if your trading strategy, right, requires a breakout or anything that requires momentum across a key level, right, what you would be looking at more is definitely what I'm going to share with you later as the RSI breakout strategy. Okay, now let me show you what I mean, right? So a lot of people say that, you know, RSI is all about people look at it as horizontal levels, right? It's always just a horizontal level here, you know. Oops, sorry. Oh man. Yeah, it's always just a horizontal level, right? It's never a diagonal level, right? It's always horizontal. But again, no one has ever said that RSI and stochastic is meant to be horizontal. You can look at it from a diagonal point of view, and this is how it looks like, right? Again, one of my really old charts. So what we notice, how do I get rid of this thing? Okay. Oh man. Do I press this? Okay, I can see this now. All right, so what we notice is that when price was bouncing once, there was one bounce on RSI over here, another nice bounce on RSI, no, another nice bounce on price, and another nice bounce on RSI, and a third time when price is coming down to there, right, we can see that RSI is testing this diagonal level, right? So it's a very nice, this in line with our buy entry, tells us that there's a very big chance that price is going to bounce up from here all the way up to here. Okay, right? So if we waited and say that, okay, you know, we're waiting for RSI to come all the way down to maybe the 25% level, it would not have happened. Correct? It would not have happened. Instead, what we do look for is that we look for this kind of diagonal RSI support levels. These diagonal levels, personally, my requirement, I'm going to write it out over here, is that the same thing. You need, out of the past 4 big bounces that happened previously, right? This is not the perfect case, but we need at least 3 out of 4 bounces, right? We need at least 3 out of 4 bounces, right? So if this was a nice big bounce previously, right, this would not have been lined up, right? But in this case, because there was 1 nice bounce, 2 nice bounce, and we're on the 3rd nice bounce, right? To me, it's I would say that it meets my bare minimum requirement that there are at least 3 three bounces, and we can expect to play the push up. So always look for the past 4 big bounces that have happened in price and see if RSI has obeyed that. Okay. Now, what has happened after this is that, yep, you can see that RSI bounced up very, very nicely. RSI bounced up really nicely here, and price also bounced up really nicely, right? And ignore the trading strategy. You know, we're looking to play a breakout from there, right? But that is how a diagonal RSI level can really help your trading. The same thing with like an ascending RSI. There is also a descending RSI, right? So it's the same thing here. We noticed that there was I'm not sure if you can see it, but there was a very nice descending channel, right? There's a very nice descending channel pushing price lower, right? It was very nice price action at this level. It's like an overlap resistance. So this is like a shooting star kind of formation. I'm not sure if you can see this, but it's like a shooting star formation, right? Along with a nice channel resistance and overlap resistance, correct? At the same time, what we are looking at is that there is RSI has been descending and holding prices pretty nicely. So this to us was a fake out, and we should expect prices to drop much further from here, right? So what has happened? What has happened since then? You can see that price came to test that one more time, and true enough, it dropped all the way to our take profit. Okay, these are just screenshots of our trading strategies in the past, right? Recorded on TradingView. So you can see how this strategy works really well, and it's a combination of not just a descending RSI. Again, let me emphasize, don't just use a descending RSI and say that, okay, you know, because it, you know, the, you know, 1 time, 2 times, 3 times, right, 4 times, so it has met the criteria 3 out of 4 times, I'm going to take a trade with it, right? Instead, look at what the market is telling you. You know, have your own trading strategy. Like for me, I always use the overlap resistance, right? If you can combine divergence, you can combine channel resistance, momentum, even better. Okay. Now, okay, I'm trying to be very wary of time, and we're actually making good time today. So what I do want to show you, what I have shown you is pretty simple, right? Diagonal support and resistance, and horizontal support and resistance, right? These are the hidden ways that the institutions look at RSI and stochastic. Now the last one, the last style is called the RSI breakout. Personally, for me, I don't use the stochastic breakout as much as the RSI breakout. But what I do want to show you is this is how it looks like. Okay, let me explain the scenario over here. So, so answering Larry's question earlier, right? There are when do you use RSI and when do you use stochastic? A lot of it goes down to your trading strategy. And in this case, right? In this case, what we are looking is that it's a combination of Elliott wave correlation and very long-term descending resistance. We realize that if the market breaks out of this level, it will be great, right? So we're not playing a reversal, right? What I mean by that is, in this case, we're not looking to play a reversal from here. Instead, what we're looking to do is we're looking for market to break this level and we shoot up from there. Why do we do that? It's because we can see that RSI has, you know, 1 level, 2 levels, and you can see that it has our price has been holding very nicely, the same way RSI has been holding very nicely, right? RSI has started to break out of this descending resistance. At the same time, there's a nice ascending support over here that is forming for RSI, right? So not only is it breaking out of this level over here, right, but there's also a nice ascending support. So that to us is a confirmation that if price is doing the exact same thing, right, we can expect a real shift in momentum, meaning that if price does close above this level, we can look to play the move all the way up to here, right? So that is how RSI breakout works. right? It's a little bit different from what I'm sharing with you because you need to look at a couple of different things, but don't just trade it alone, combine it with different forms of analysis. And what has happened since then for us is that, true enough, you see price, the moment it broke out, right? What basically happened for RSI is that it broke out very nicely, you know, from its descending resistance over here. You can see it broke out. It was supported by our RSI, ascending support, and it just took off all the way to our take profit. Okay. So yeah, you know, it's a different way to interpret RSI, and it's actually a very effective way too. I'll be showing you another way, a little bit clearer. All right, I'll be showing you another way that you can use this. So it doesn't always need to be a diagonal level for a breakout to occur. Okay, what I mean by that is that you can see this ascending support working really nicely. Right, it's working really nicely. It's working really nicely. Now the momentum is up for sure, right? But what we have noticed is that there is a very, very strong bearish divergence. Price has always been rising, right? Price has been rising, making higher highs, and RSI has been making lower lows, right? Lower lows all the way down to here. So it's a very, very strong bearish divergence. What we are looking at, I'm just going to erase this again. What we were looking at was this key thing over here. Remember, this is an overlap resistance, overlap support, I mean. If this level is broken, and at the same time this level is broken for our long-term ascending support, you add in a bearish divergence, and if at that point, if RSI broke this 46%, which it actually did in the next few bars, is that we can see a big drop from here. Okay, so yeah, it's always a combination of trading strategies. And you can see from there, the moment price broke, RSI basically broke and it went all the way down. And in line with that, price has also broke and went all the way down. Right. So that is how RSI breakout trading strategy can work very effectively. Okay. Now I want to cover a couple more things together with you guys, right? And one of the next thing I want to show you is a combination of a breakout and ascending support. Right. I'm just going to show it to you over here. So this was our trading strategy. I guess it's actually good that I'm showing you guys so many different trading strategies, so that you can kind of get familiarized with the way that, especially when we touch on the more advanced topics, right? You can see that we have a nice descending resistance here. It is holding price down very nicely. All right, it's holding price down very nicely. Then price broke out from here. Price broke out from here and it's back down to retest this level, right? Now, you all know that this is my favorite kind of support. This is an overlap support, right? This is an overlap support. Prices came down to retest. The same thing with RSI. You see that RSI has been holding price very nicely, right? It broke out, and now the interesting thing is that you notice that there is no ascending support on price. But there is an ascending support on RSI, as you can see over here, right? And it looks like RSI is going to test this support one more time. So not only is there a breakout, right? You can see that the breakout occurred over here when RSI finally crossed over. At the same time, there's a very nice ascending support over here, telling me that there's a very big potential that price will bounce, RSI will bounce, and price will bounce. So as you can see, there's a combination. There's a combination of ways to interpret RSI, so that you can trade. You can implement it in your trading strategy. Right. So what happened from here? Right. What happened from here is, true enough, price. Price basically broke out, tested it one more time, and shot all the way up to our take profit. All right, so that is the nature of combining both a breakout and an ascending support. All right, remember, you can see a very nice breakout, right? Sometimes you ask yourself, when is the breakout I'm looking at, is it real or is it fake, right? Is it real or is it fake? One way to confirm that with yourself is to look at RSI and see, did RSI really break out of it yet? And if it did, right, is there any supporting elements tell you that, okay, there's a chance that there's RSI will support this breakout to go further, the same way it supports price to go further. Okay, so we have a question from Imad. Bearish diversion is when price sets newer higher lows, and bullish divergence is when price sets newer higher highs. Okay, so there's a question on divergence. Now, what I do want to share with you, this divergence over here. Let me explain bearish divergence, okay? Now, what exactly is bearish divergence? Imagine this is price, right? Price is going up, and it's going up, and it's going up, right? So this is the highest of price, okay? And what is happening to maybe RSI? So you can see that this is going upwards, correct? RSI could be doing this, you know, this. Oh wait, just let me. Yep. Okay, like this, and like this. Right? RSI can be going downwards. So this clearly tells me there's a divergence in agreement, right? Price is going up, but why in the world is RSI going down? RSI is supposed to follow price, right? So if RSI is going down and price is going up, that is where a bearish divergence occurs, right? It tells me, and usually it is the RSI that is showing the true story, right? Price is too easily manipulated, and that is why when you see a bearish divergence, right, it increases the chances of you going short, right? The probability that they will be successful. Now, now I can also explain what bullish divergence means, right? So bullish divergence, right? You can see that maybe price is going up, going up, going up. Is making higher lows, right? But what's happening for RSI is that it is like it's doing this, it's doing this, and it's doing this, right? It's going lower, right? So it's the same thing, you know. Price is going higher. Oh wait, this is bullish divergence. I am so sorry. I just confused bullish divergence. Just let me draw that again. Sorry. For bullish divergence, price is making, you know, is going lower like this, right? Is going down, is making lower lows. But what is happening with RSI or stochastic is that it is going higher, right? It's making higher lows, right? So in this case, because it's called a bullish divergence, right? What we're expecting is that the bulls will take over and push price up. So that, in a nutshell, is what bearish divergence and bullish divergence is. Okay. Now I have a couple of different examples. Again, I want to be very wary of time, and I want to allocate a little bit more time to Q&A today, right? So I will be skipping the last example. I'll be skipping the last example, and I'll be showing you. Oh man, I can't skip the last example. This has to be one of the nicest examples, right? Just showing you really quickly what I mean by an RSI breakout, right? You can see how price has been, RSI has been obeying this descending resistance line so nicely, right? Every time it touches there, it reverses, and it has finally crossed this level, right? When it crossed this level, coincidentally, what are we noticing? Right, we notice a double bottom, right? We notice an overlap support. So what is that telling us? There's a very, very high probability that price will shoot up to our take profit, right? We are really seeing a breakout over here. Okay, so what happened since then is that, true enough, price, I know you can't really see it, but price shot all the way up to our take profit, to our take profit. Okay, So that is how you look at the RSI breakouts, right? The more times you see it being tested and it finally breaks out, you know, that is a chance that there's a real breakout that is happening. You combine that with chart patterns like a channel breakout, a double bottom, a double top, head and shoulders, right? That really improves your probability of a successful trade. Okay, all of these we'll cover next time, but yeah, today I really wanted to focus on the on helping you guys understand the different dimensions, the different ways to interpret RSI and stochastic. Today, I will also be showing you this really handy tool called the MT4 True RSI Indicator, right? We just created this, right? We just created this. It's pretty exciting, right? There's massive interest in it. I'm giving you guys a sneak preview of how it looks like. Okay, now let me just give me a second. Let me see. All right, there we go. So this is how the indicator looks like. So when you load the indicator on the chart, right? I'm just going to minimize this. I'm going to show you this, right? What the indicator does is that it maps out all the big levels of reversal. What I mean by it has mapped out all the big levels of reversal, right? Take a look at this, right? A very nice bounce happened over here. A very nice, so the green one are the bounces, right? It's a very nice bounce, a very nice bounce, a very nice bounce, a very nice bounce. All these past, so for the past 5 times a bounce happened, right? Did it bounce at a certain RSI level? Right now, interesting, eh? So let's click view and we will, I'll explain this next time, but we will see over here what the, whether there is a resistance or there's a support, right? But so in this case, it shows that yes, a tick means that there is a support, right? I wonder how that looks like, right? So I click on RSI 21 view and let us analyze what we have discovered. So just let me toggle over the few, right? I think 21 is the most accurate over here. So what it has shown me is that when price bounce over here, coincidentally, it bounced on RSI over here. When price bounce here, there was a nice little bounce over here. Price bounce here, there's a nice bounce here. Over here, okay, similarly, you know, RSI tend to be at 37%. And there's this bounce over here, and RSI was at 37%. So the hidden level is not 30%, it's not 20%, but it is, according to this, is 38 to 41%. It's 38 to 41%, right? So this gives a very interesting perspective that there is a hidden, you know, when the next time RSI, you know, comes all the way down to here or is around this level over here, right? And you're expecting to play a bounce. Maybe, you know, maybe you see this resistance, you see this overlaps, pullback support, you know, price is coming down to here. You're expecting it to bounce up, right? At that level, if you see RSI exactly at 37 to 40%, right? You know that the past 5 big bounces that occurred all happened when RSI was at 37%. So that increases the probability of you calling the bounce at this level when RSI is in line with that level. Okay, so that is the hidden RSI in action. We'll just look at a couple of other examples for this, right? So the next one, maybe look at euro dollar, right? We look at euro dollar. All right, same thing over here. I'm just gonna hide it. Which one am I viewing? All right. Okay, we're going to look at euro dollar. I'm going to hide this. I'm going to hide this, right? How far back? Okay. Also all the way back there. Okay, so we're looking at euro dollar. Same thing over here, right? The indicator scans and realize that nice little bounce here, super nice bounce, super nice bounce, super nice bounce. I wonder, is there a level that it bounces off from? And according to RSI 34, Yes, there is one, and it is at 36 to 40%. When we click view, this is what we see, right? So here's the interesting thing, right? The very first time it happened, right, it actually didn't bounce at the 39%, right? So this is the 39%, right? Instead, the next 3 times it happened, one time over here, one time over here, and one time over here, right? It all bounced really nicely, right? And all in line with the 39%. So again, this is getting a little bit higher, but it's now 39%. So it's a very interesting thing that, so when price comes down there again, we can expect with a higher degree of probability or certainty that we need to be looking at the 39% for the big bounce to occur. Okay, right? Because for the past 3 times there was a major bounce, it all occurred at 39%, right? And we are able to find resistance too, right? And we maybe H4, I don't know. So it repeatedly scans and looks for different time frames. So H4 is one of it. 30-minute, nope. Let me see. Okay, the 4-hour. We might have something on the 4-hour chart. So I'm just going to view it over here. Okay, so there we go. I'm going to show you the other side of the equation, right? Just let me take a look at this. All right, it's too messy. All right, just I'll show you this instead. Okay, so we are looking at reversals now, right? Big reversal from here, big reversal from here, big reversal, and big reversal, right? Where did this align? This align here. This one was actually slightly below, right? But for the next 4, 1, 2, 3, and then from here, interestingly, is that when it broke this level, it went all the way down. So this is actually a key. The RSI 65% rather is a key hidden, or rather the true RSI level to look for. Right, so very, very useful indicator for your trading, right? You will never find this anywhere else because we built it ourselves. It took us months to build it, and we are giving it out for free, right? Because AxiTrader, we have a very special collaboration with them, and I think a lot of you guys previously mentioned that you're not getting enough of the proprietary tools that we're giving out. So we're being a little bit more generous this time. Okay, and what we're going to do is that we will be giving a guaranteed true RSI indicator, the one I showed you, for anyone who completes this entire survey. Okay, please complete it seriously. It's a very long survey, right? I think it's going to take you at least 10 to 15 minutes to complete it, but really answer it, go through it, answer it. It helps us understand you better, right? At the same time, it gives us some feedback on the webinar, right? So when you click on it, I'm just going to copy this and I'm going to send it into the group chat. There we go. Right. So when you go there, right, we have the tradingcircle.io, right? It'll ask if you are AxiTrader client, yes or no. How would you rate this webinar? 1 is you suck, 3 is meh, and 5 is good stuff, right? So if you rate 1, I'll personally come and hunt you down. Okay, so anyway, don't feel any pressure. Don't feel any pressure, right? Just give us your honest feedback, right? Because you're always looking to try to improve. Tell us one thing which you like about the webinar, right? And one thing which you think can be improved about the webinar, right? And as you continue, what will happen is that as you continue, what will happen is that we'll ask you a little bit more questions about yourself, what industry you work in, what's your main purpose in trading, what kind of returns you're looking for, right? And it goes on a little bit further, what kind of do you use technical analysis, do you use fundamental analysis, right? And what platforms you use, right? Just basically, it's a survey for you to fill up so that we better understand your needs, and especially when we're launching a very cool trading room for you. Okay, so Olisei, right? You ask what is the link? This is the link. It's called the tradingcircle.io /survey. Okay, right? So part of the reason we're doing this is so that if Guinea's inbox doesn't get filled to the brim every time our webinar ends, right? So what we can assure you is that as long as you fill up the webinar, fill up the survey, I mean, fill it up seriously, right? Just put good thought into filling it up. Do us a big help here by answering each question really seriously, right? And we will review the answers, and anyone who answers all the questions seriously, we will email you the download link for our really cool MT4 True RSI Indicator by the end of the day, or it looks like it's almost the end of the day. So by the end of the week. All right, guys. Yeah, so that covers the bulk of what I want to share with you guys today. Thank you very much. Archie has asked if a video of this webinar is available. It is available at the end of our series. So once we finish everything, our XC training series, then we will release the webinar videos to you. All right. So we got a question from James Kwa. Do you use other levels for the stochastic besides the 80-20? Example, a 65% level shown in an earlier example. Yes, that's the whole point of my webinar today, that you don't need to use the 80-20, right? You can use any level that that price is showing you. I'm not sure if we have yeah, you can use any level that price price says that it is valid. Just let me see if I can find this over here, right? If I remove this indicator and I throw on the true stochastic, okay, it's the same thing as this example, right? This is the true stochastic indicator, right? This is not given out for free yet, right? So hold your horses there. Yes. So your question, James, right? Should you use 80-20 or anything more? What I can show you over here is that for the past 5 times, one, I know you can't see it over here, but there's another one. 2 times, 3 times, that's a nice bounce. 4 times, that's a nice bounce. All of it, right? Not so much over here. This one, yes. This one, yes. This one, yes. This one, yes. It all occurred around the 4% level. Okay. Same as you can see is the 4 to 7%. It is not 80-20, right? My own stochastic, right? My stochastic doesn't show 80-20. It just scans and tells me where are the big level of reversals that happens. Okay. Some people use 50-50. So we got Muhammad Hussain who said heard some people use 50-50 for the RSI. Have you heard of that? That could be a way to so the 50 level is, if you're talking about having a 50 level drawn in the middle to determine whether something is bullish or bearish, right? Personally, I think what will work better would be the MACD. What I mean by that is, just let me see if I can find the MACD over here for you, right? And just go remove my indicator. So the reason why someone use the RSI and have a 50-50 level is to determine that if it goes above 50 is bullish, if it goes below 50 is bearish, right? But what can be achieved with a little bit more accurate result is the MACD, right? You use the 0 line as the indicator. Anything that goes above 0, you're starting to see it become bullish. Anything that goes below 0 is starting to get bearish, right? So I guess in some senses, I have not heard of people use 50-50. I can understand why they would use 50-50, but I think the same kind of result can be achieved with MACD. All right, guys. Anyway, right, what I'm going to share with you lastly is that please head over to AxiTrader educational seminars. All right. Yeah, you're welcome, Muhammad Hussain. Please head over to AxiTrader educational webinars. Right. Today we actually covered the advanced RSI and stochastic. Next week, we'll be covering about break-even idea and validation. Then there'll be the super intensive week on Fibonacci retracements and Fibonacci extensions. That is super crazy stuff, right? Followed by correlation, right? Crazy stuff too, right? And then we go into a trading strategy, and I show you how I apply it all together to pick stop loss and take profit targets, right? So it's an awesome, really intense. We're going more towards the advanced strategies. So so tune in, go over to AxiTrader, register for the upcoming webinars, because this is where it gets really juicy, guys. And all right, once again, thank you for tuning in, right? Listening to me throughout the whole 1 hour and beyond. Right, I really appreciate it, guys. And yeah, just do me a big favor by filling up that survey. It helps us understand your needs a little bit better. Helps me improve a little bit better. As you can tell, I have been doing less drawings because everyone says my drawings are terrible, right? So yeah, basically I'll do less drawings and more examples. Okay. Thank you so much. Trade safe and peace out, guys.